Investment decisions. In the latest extreme uncertainty report, Sanlam says the local investor confidence has been shaken and this drives away wealth from the country, but this should not lead to financial blunders. I spoke to Alvin van der Merwe, Private Wealth Director at Sanlam.
The investment environment was a very tough one that we've experienced because I think there were probably two or three extreme uncertainties. The first one was that the economic growth rate was slower than what most people expected, and with that company profits were slightly weaker than what most people expected. And then secondly, I think, and very importantly, is that there's a lot of uncertainty around interest rates in the world because interest rates are artificially low as a result of central bankers and the policy measures that they introduce. And with that, it was simply just an environment where investors were extremely skittish, and what we have found is that any investment where the economic profits of a company disappointed market expectations, the share prices of those shares were extremely harshly dealt with by the market, and those share prices came under severe pressure. The opposite was also true. When a company performed in line or better than expectations, we've also seen very good performance in our own market over the last year. And we think this uncertain environment is likely to prevail.
So at the moment, what is your interpretation of how the well of investors are feeling like?
I think some of the investors might feel a bit punch drunk because the returns were certainly lower. The main message for us is, in a very uncertain environment, one has got to treat risk with respect and other people's money with respect. So our basic message is really that we need to make sure that we understand the risk in portfolio, diversify properly, and that one has got to be very careful not to take extreme views in portfolios because that can harm the long-term wealth of investors.
Now, given the government's policy, sort of an interventionist approach, like, for example, Pravin Gordhan trying to rein in confidence on foreign investors, what do you think about government's policy? Is it prudent enough to convince the investor to stay within the South African shores?
Look, the budget speech that we had in February was really aimed to put investors' mind at peace. I'm not convinced that the minister achieved that because I think there were still some concerns about the spending side and the fiscal side, because probably the most important risk that people are grappling with at the moment is whether South Africa's credit rating will be downgraded later this year. And if that is going to be the case for foreign funding, so the government will pay more, and even companies that fund overseas will pay more for the funding. So that will have a negative impact. And I think it's also a psychological issue. If your credit rating goes from investment grade to non-investment grade, it is a stigma that you don't want to have. Nevertheless, I think Pravin Gordhan has done a lot to try and appease investors, and hopefully he can pull it through for us. The other part of policy measure, of course, comes from the Reserve Bank, and I think the Reserve Bank has been very consistent with its policy measures, but it's got a bit of a problem in the sense that we've had interest rate hikes in South Africa at a time when economic growth is very low, and we need to get the growth rate up in a very tough environment.
So going forward, what would the most accurate advice, if most probable, be for investors right now and going forward?
Yeah, you've just got to make sure that the assets that you have, that is in line with your long-term investment objectives. And I don't think one should act with emotion, because there's a lot of emotion around at the moment. And if you act in line with your long-term investments and you buy cheap assets, there are still some cheap assets around, I think you will receive the long-term rewards of that.